What's up everyone, this is Duran over at Alpha 7 Trading Academy. Today I wanted to go over something small, didn't want to go over it in depth. This is something that we use in level 4. It's a very advanced strategy and setup and not used by many because it's not understood by many. And that is called harmonics. And harmonics are basically symmetry in the markets. It is believed that among chaos lies order. Fear and greed fuel the markets. So what we do is we track the magnitude of the reactions with our charts. Fibonacci levels help us to gauge potential reactive price levels. From our previous videos, you'll be able to see how we use Fibonacci's. And when certain Fibonacci levels hit in order, this can create a certain flow of price movement. And certain reactions tend to repeat and are embedded into the natural order of the markets. So harmonic trading is based on identifying certain symmetrical pattern cycles that repeat. The first one and the most basic one is ABCD patterns. So I'm going to go over an ABCD pattern to give you an example of what to really look for and how to find them and how are they used. And one thing you need to know is that these are projections, and this is one of the only tools in order to find projections of where to get in. Okay, and they're called price reversal zones. Okay, so PRZ zones is what we call them. So let's find one right here. Give me one sec. So let's go to QIHU, and we're going to use this Fibonacci button right here, and you're going to click ABCD pattern. And this is in tradingview.com, guys. So you're going to click this button. You're going to get ABCD pattern. Now there's an XABCD, but you're not going to be using that since it's really only for Gartley patterns. And I'm not going to go into Gartley patterns. I'm only going to go through the ABCD pattern. So we're going to use a significant high to the low, which gives us the AB, and then we're going to drag it to the C, and we're going to see that the high of QIHU is actually 1.618. Okay, now the levels are for B and C to be 0.618, 0.786, or even 0.382, and then C and D should either be 0.618 or 0.127. And usually what you should do is use the ones that look the most symmetrical. So remember, one thing is that you're never going to get them to be exact. So we have 0.382, and now what we need to do is project C and D, right? So as we're looking for the projections, you could actually move this to 1.217, because look at 1.618. It doesn't look symmetrical. So we're going to go with the 1.27 for the projection. And it's at this point where we're going to find the price reversal zone. And just to let you know, we don't just use this in order to get into trades. We use this as something that we include in order to better define our setups that we use in level 2 and 3. Okay, which are pups, mini pups, market structure highs, perfect storms. So we include these in order to strengthen our probabilities. And the wider time frame you use, the more stronger and the more weight the price level holds. Now I didn't put Fibonacci's, but usually you want to put Fibonacci levels as well into this. So that way you can get a better idea of other levels that it may be reaching. Now there's one more trade that I do want to go over, and I believe that's going to be in Apple. I'm going to find it in Apple, but just remember that D is the projection, okay? Let's go to Apple. Okay. Now I'm going to go to the weekly, because remember the wider time frames hold the strongest weight. So I'm going to cancel this, and we're going to do it again. Okay. So once again, I'm going to choose the ABCD pattern, and you should get acclimated to the type of formation linear wise there should be in order to look for these. So I'm going to push it all the way to the front to only show the point AB. So that way we can make believe in hindsight, or we're going to look for the C and D projections. Okay. So first we're going to do A to B from the significant low to the high, and then we're going to take it to the drawdown, which is B. Now I'm just going to click on this and fix it up a little bit and move it a little bit ahead, so that way we could see what C and D would be. Okay. So as you can see, if I move it up, look where it goes, to 0.618 exactly. Okay. That is your price reversal zone. Now as you can see, the stochastics also cross down, but I guarantee if we looked at the shorter time frames, it were to be aligned with the weekly, and we would have a nice setup on the shorter time frames to give us insight on this reversal, okay, with some setups that we learned in level 2. So as you can see, D is the price reversal zone. You could even use C as an earlier price reversal zone to D, right, on the pullback. And this is a basic way of using harmonics. I hope you guys learned something here. I wanted to just give you the most basic concept of harmonic patterns. They're used by a lot of professionals, and if this is something you want to learn, there's not many places where you could learn it from, and we teach it very, very good. We teach it very well, and I think you guys would enjoy it. So I hope you enjoyed this market concept video of basic harmonic concept and patterns and how to use it. So remember, the levels are 0.618 for B and C to 0.786, and then from C to D 0.1618 and 1.27. And make sure that you study them and you look out for them, because they take a long time. So I hope you enjoyed, and have a great day. Take care.